Welcome to Value and Momentum Breakouts. I'm JD Henning. This is August 20th, the start of week 34. And I have four slides to show you today. We'll keep it short. And we also have an important trend change that may be starting. And I want to highlight that in the slides for you today. The first slide is for the SPY S&P 500 chart, and we've been tracking that closely. This is the weekly chart going back to the 2020 COVID correction here. And these are the signals for topping of the negative channel. We've had a tremendous run from July with the breakout above 390, and it went above 415 as forecasted, and it touched 430. It looks very much like we could be seeing a leg lower, but the indicators on the weekly charts are still showing positive momentum, and that is something we should be looking for. The insert here is the S&P 500 momentum gauges, and what you can see is we've been on the longest run, positive run on the signals, going back to at least January of 2021. And what's starting to happen is that the positive momentum is showing a little bit of a topping indicator. The negative momentum remains low, and so that's a good sign. We haven't gotten a negative signal yet, and what we'd expect to see is the negative values spike and the positive continue to decline. This is, however, an early warning, and it does coincide well with this topping at 430. So we'll watch for more of that. And you can follow all of this live on app.vmbreakouts.com. The next slide I want to look at is Google, along with the daily market momentum charts, gauges there. On the Google chart, you can see a unique pattern from May where we've just gone up and down, swing trading into the July second quarter earnings reports. It sent it up above the trading channel. Unfortunately, in the past week, it's broken below that channel. It's also broken below 120 support. And we're seeing the technical indicators rolling over. This one concerns me. It's the money flow indicator has turned negative, so people are cashing in. And that's, you can see it here. It preceded a big decline, and also here it preceded the topping signal in April. We haven't got a confirmed topping signal, but we're seeing a lot of the same indicators. The other thing is the average true range is the lowest it's been in over a year, which generally means that the momentum is going to shift. And if we look at the daily market momentum gauges, we can see, similar to the S&P 500 gauges, we've been on a very positive run. It's going on 24 days. The positive momentum is starting to lose some steam, and it could be headed for a negative crossover. Just something to look out for. The negative momentum has really picked up. It's to 19. That's the highest level going back to early July. It hasn't picked up so much on the S&P 500, but it's picking up in the market, and that's an early negative signal. Next one is Apple, and Apple is really driving the major indices. You can see this incredible run from June. It stayed in a positive channel. It broke above the 142 resistance and confirmed on the July 19th positive signal for the momentum gauges. And from there, it's just been an incredible run. It's still in the positive channel, but it's pulling back towards a retest of 168 support. And if Apple breaks down, certainly the major indices are all going to break down. The other thing that I've highlighted here is that relative strength, ADX, MFI, all these technical indicators and oscillators are showing high overbought levels with a pullback likely. Now, it doesn't mean that the pullback is going to be a dramatic return to 140 levels, but it does mean that people are cashing in, taking profits after this run, and that the next lower levels of support will probably be tested, again, around the 168, 170, possibly as low as 160, but we'll see how that unfolds. Apple is a real key driver of the indices, and we'll watch that closely. And lastly, I'm just going to highlight a bear fund, Bears, and this is basically a U.S. mega cap bear fund, inverse fund, and you can see that it's starting to break out. So the U.S. mega caps are starting to turn more negative, and the indicators here show that we're kind of the lowest levels since April. Money flows are coming off the lowest levels since April, and they're coming into the bear fund. We don't have a confirmation on the ADX line, but it's starting to improve. And I picked this up on Thursday, and seeing some gains in it. We'll have to see if that sustains. The next resistance is around 25. But it's certainly breaking a channel here, a strong negative channel, and it has strong similarities to April. Again, we can go back here. We're seeing strong similarities to April on Apple, strong similarities to April on Google, and these are things that we should be aware of. Again, here's April. We're touching the top of the negative channel. So it seems highly probable that we're going to be heading lower into this channel. We're seeing outflows. We're seeing the momentum gauges going lower. And we're seeing some breakouts in bear funds. So that's a forecast of week 34. I hope it helps you in your trading. And down here, I'll just touch on it. These are a list of holdings and bear funds that I have in an active portfolio. And you might want to consider in the week ahead if this trend continues. All right, I wish you all the very best. Thank you for watching.